First up, let's look at Eurocad. And we chose monthly time frame because we want to be in the know. We need a clear directional bias, and it gives us a raw picture of the market over an extended period of time. And we're looking out to 2010 price action. And that 2010 price action will have noticed a couple of weak rejections and possible retest. So we are going to follow that weak rejection and see where it leads us to. And keep it in mind that in the future, the price will come back and react in those areas. Most definitely, price will come back there and react. This is it. This is what we want. If you look closely here in the month of April 2022, you will see that there's a demand floor at this level. And that is why the bearish candle has closed by cutting off about 30% of the body. So market closed at 1.38368. There's a monthly rejection on that level. So on that level, we hold it responsible to be a demand floor. So you see price have broken that structure. To break up that structure, price could return back to this area for possible retest. So from a monthly, we are holding because of course, I mean the candle can easily switch and end up that way. So let's hold here as number one, and then we look up from the roof to see if there's a pattern that have been consistent with selling, and we will focus on the body of the candle where price have found multiple resistance. In 2008, there was a close market rejection at that level, and I do like us to hold the wicks responsible. Let's leave the body of the candle because of the way the market is reacting. So I will hold the wick responsible. If we hold the wick responsible, even if you like, go to 5 minutes time frame, the structure becomes a valid structure. But when you avoid the wicks, if you go to things like daily and 4 hours, you are going to have a mixed up chart. So if you're on a higher time frame and you want to keep your mind happy, then sometimes you play with the week, sometimes, but I prefer the body of the candle. But most times when we look at the structure of the market, we go with the weeks most times. Sometimes too, you can switch it to the body of the candle close. And at this level, I also have a structure where I also want to focus on the weeks and hoping that if price returns at this level, just like it has done in the past, you could potentially see yourself buying Euro card. So if we get back to this one, we don't know when. It's going to take a whole long time, like a whole long time. So nobody can actually tell. But we are doing it for record purpose that this is the right thing to do. Now we've had market firmly the way it has reacted. This is your supply, and, uh, and I'm giving you another one as your supply. And we have another retest to that supply roof, making it a descending trend line. And we have here is a demand floor. And we have another retest to that demand floor. Price returns here. So it's another demand floor. So what we'll see here, it's then we have a midterm break. We have a structure at this level, which I also see on a very clean break of structure, and market has reacted and rejected that supply roof. So after rejecting that supply roof on monthly time frame, you can see that Eurocard has started dropping. And with the fundamental data on Friday coming in with a reduced unemployment rate in Canada, we could potentially see Canadian economy bracing up for big economic shift. So it's more to watch what BOC is doing, and we believe that this structure is valid. It's valid till end of May. It's a valid structure. So you can see what price have done after updating here as a demand floor, demand floor, break of structure, and a retest, and another retest, and another retest. This guy is going down. It's going down. It's going down. After what happened, the weekly bearish candle close gives us a very clear signal. After engulf previous day bullish candles, we could possibly see that the opening week will continue to drop. And if you are in doubt, let me also tell you why. That although there is something I notice and there's something I'm seeing, which we might also want to consider using our line chart. On our line chart strategy, you see that we have here as I want to go with this. I want to go with that. So on our line charts, we see after a break of structure, price came back, retested, rejected it, went up. So most likely that this is a minor structure for the day, and you see what it has done. Go back to our line chart, see price break of structure. Price came back here, retest it, retest after break of a supply roof. It came here, retested it, left, and came back again to retest it. So we believe that when the weekly candle closed on break of a demand floor. So that is something to watch on technical. Now a lot of technicalities coming inside. This is a demand floor, and the demand floor is broken on weekly. Should we fold our hands and watch and think that it will be the same? It will not be the same for breaking a demand floor. You can see that structure, even despite being a week, 1.47992, a weekly demand structure was broken Friday due to the strong fundamental print coming on from the Bank of Canada. It came down, broke the structure, indicating that Canadian dollar will continue to appreciate against the euro. This is what the structure is saying. I'm not the one making this up. I'm not making all these things up. I'm telling you what the structure is doing. This is what the structure says. There's a demand, there's a price that has been held. Close of Friday, due to fundamental data, shows in liquidity inflow into Canadian dollar. And we will look at how oil price is doing and other commodities. Because Canada is a kind of commodity dependent, commodity reliant economy, and whatever affects a commodity affects them. But we are looking at it and the structure have broken 1.47992. What do you want me to do? It's not my fault. So you see the structure clearly. When I put on my line chart, you can see on that rejection floor, price came back, broke that structure. That structure is broken. There is nothing anybody can do about it. Honestly, you will see it by close of next week. You will see what will happen. Let's wait and see. Let's wait and see. So on Eurocard, look for sell opportunity, please. On Eurocard, go to 4 hours. I will stay on sell on Eurocard. I will stay on sell on GBP card. So I'm betting on Canadian economy. I'm betting on Canadian economy based on what I've seen. So you can see a break of that level, and the worst that I want to see happen is price to return here and reject the way it rejected at this level too. So if we are to place our vertical root strategy on this weak candle, which we're expecting, the new weak candle will also end up in rejection. The new weak candle is coming and it will come to this area and reject. So I will put here for my buy. So I will put a buy at this level. buy at 1.44912, sell at if we have a correction pullback, the market will continue to sell until it comes to 1.44912. So this is what we see on technical, and we have another structure at this area. This is a very strong area to wait for price, and I feel price will most likely come down there. So this is what we see, and now we have seen what we are looking for, and let's look on the monthly body candle close of the line chart and see if there is a breakout. Ladies and gentlemen, Eurocad sọkwasị na sell kwa ọkwa sell on a monthly time frame. It has broken the look at the ascending trend line on a monthly chart. On a monthly line chart, a clear vivid breakout on a monthly ascending trend line. It is clear. So you don't need to go to Europe. You don't need to go to Canada. Just position yourself. You're going to sell Canadian dollar. Eurocard is a sell. It's a sell. That is what it is. It's a sell. Eurocard will sell. So all you need to do now is go back to your 30 minutes, go back to your 1 hour, go back to your 4 hours and look for your POE. I will not tell you that one. Go and look for it. I can't do that work for anybody. Go to that level and look for your point of entry. You have seen already on a monthly time frame. And we have a strong fundamental data backing Canadian dollar that they could continue to push down on euro and betting on Canadian economy that they will draw down. They have done well in the past. They are very good at drawdown. Canadian economy is very good at drawdown. Look at what they have done in 2009. They draw down. Look at what they have done before in 2000 and the year 2000, another drawdown. So they could do that again. If they get angry, they can draw it down again. They can do it. They have done it before many times. They draw euro down. They draw it to a significant point, almost to parity. They draw them again from 2009, draw them again, and they are done. And this time they are going to do it because there is break of structure. After euro failed to uphold its buying potential, it broke a structure, retested it. So they came again, tried and failed. This one now might really hurt them so much. It might hurt them so much that you begin to see euro in this floor. It might threaten its probability, and the fundamentals are what control the direction of market. So when we talk of three directional bias, they are reliant on fundamental data, which are never fixed. So sometimes countries manipulate their data in order to give them statistical edge in the market. So I think we coming here, it's not a bad idea. Let's look at it. I like that zone. So that's a zone of buy and there's a zone of sell. So if price comes here, feel free to buy at 1.444912. 912 as it cuts across. Look at how we had rejection before in November. If it returns here, this month candle, this is new month candle, we could have a buy at that level. We could have a rejection. I call it monthly rejection. It's a monthly rejection. The reason you're going to have a monthly rejection, there's a price action here. A supply roof, breaking supply roof becomes a demand floor. Breaking demand floor becomes a supply roof. Supply roof one, supply roof two, three. Break of supply demand floor. Demand floor test one in the month of November. It will come back again in March or in February to test the structure. This is a monthly candle. So if the monthly candle comes here, you wait for monthly rejection and buy back. So put your buy order. Put your buy order at that level. 1.44912. You will see money when it comes here. It might not be long. It might give you 50 pip. It might give you 70 pip, but and come back and break it. But the most important thing is that it must respect that structure. It must respect it. I am telling the structure it must respect it. That's what will happen. That's what will happen. So if you are in doubt, look at what it has done. After that break of structure, it came back here and respected it in the month of November 2024 on a monthly rejection candle, meaning that the monthly candle sold till it touched a breakout of the descending trend line and rejected it. So if it comes back in February, it will continue to sell. So all the parameters that is leading to continuous sell of Eurocad has been shown. A breakout from an ascending trend line monthly is there evident for you. The monthly candle have shown by close of last this week candle was what made it very clear that the monthly candle will continue to sell. And the only place the monthly candle will find support is by that breakout descending trend line that have had last year monthly buy candle. So if that happens, we'll continue to sell until it comes to 1.44912. That is where you have a monthly rejection. That's where you have it. So it's what we see in the market, and